at the end of the day, if you think about it, right, when you've got a trade, there are 5 possible outcomes. There's a big win, a small win, break even, a small loss, or a big loss. Those are the 5 possible outcomes that you can have with any trade. If you just eliminate the big loss so that you don't have the big loss in your trading account, well, then you'll probably be profitable over time. There's old traders and there's bold traders, but I don't think there's too many old, bold traders around. If you're too bold in this game, you're likely to crash out at some point. So those who have stuck around and have made a long-term success of it, are very much on top of the risks. They understand how to manage risk, how to make sure that they don't get carried out on a stretcher. It's important. Often I'll look for, say, stocks that are above 200, above 50-day, and also above their 15-day moving average. So that kind of narrows the universe down quite a bit. And I'll often filter that out and then use that, and literally then from that point onwards, then it becomes a case of I'll observe the charts.
Welcome back to the Unpacking the Markets podcast. Now, before we kick off, can I please ask you to subscribe to this channel so that we can continue to grow and help traders worldwide. Let's get into it. Garth Mackenzie, thank you so much for coming on. I want to get right into it because you started in the retail broking business. And I'm wondering if some of what you saw retail traders doing kind of contributed to your success.
Yes, Colin, thank you for the opportunity. It's great to meet you and great to be on your podcast. So yeah, absolutely. I started out as a retail futures broker, ended up there not necessarily out of choice, but I wanted a role in the markets, and I came in at a time which was 2001. So obviously that was a bear market, and firms just weren't hiring, right? I was in South Africa at the time. It was a bear market. Firms weren't hiring. One firm that was, however, interested in me was a futures broking firm, and there were really no other jobs available for me. So I took that one, and it kind of got me started down a career, which I'm pretty pleased it got me started in that way, actually. At the time, I barely knew what futures were, but got started, got put into a role as a retail futures trading broker, had to quickly learn the ropes and how it worked. And hence my career since then has always been fairly focused on derivatives, mostly futures, CFDs, and active trading in large part. But you're right. So the issue about retail trading and whether it contributed to my success, it did in a number of ways. First of all, being a retail broker at the time, as I said, when I started, it was a bear market. But once the bull market got started, which was from sort of 2003 until 2008, that was a roaring bull market before the financial crisis hit. And we made good money then as retail brokers, broking futures, and we had single stock futures in South Africa, which were very popular products with the retail trading community. So we made good money as brokers, but also it taught me a lot about the markets and taught me a lot about how people trade. Also taught me a lot about what not to do, because the statistics don't lie. That you'll see it on the top of the websites for all of these CFD providers, that typically, anywhere between 70 and 80% of their clients lose money. And that's the fact. That is a fact. Most of the clients lose money. And that's not to say that the other 20% are all killing it and driving Ferraris. Like, most of that other 20% are just scraping by and probably breaking even with a bit of wins and a bit of losses, and, just grinding it out. And there's only a very small slither of traders in the thin end of the wedge, really, that actually make a lot of money and can do this sustainably. So hence, being involved in a retail broking business, it was interesting to learn from the clients actually what not to do. Some of our clients were very successful, but then ended up losing all their money as well in the financial crisis. And then most of the clients actually were not successful, if I'm honest. And what I always found was that your best client this year isn't going to be your best client next year. and next year's best client won't be your best client the year after that, because often there's a churn, especially in the leveraged space. So trading in futures as we did, and particularly in the retail trading space, there's quite a high churn rate of
Yeah.
clients because guys come and go, so it definitely has contributed to my success by learning from what not to do, I suppose.
That's so interesting you say that. I think it says a lot that you can have a successful year 1 year, but how many people have, I know you have, but how many other people have had 5 successful years? If that client is no longer your best client, I'm assuming they went bust in the following year or maybe the year after. I think it just says a lot to the difficulty you forget. But you mentioned this statistic. Um, when you were seeing people, obviously, trading's a challenging space. When you were seeing people struggling, and then before you started trading, did you ever just think the statistic doesn't apply to me? Did you ever think? 'Cause I thought that. I thought, oh yeah, okay, these people are failing, but maybe I'll be okay.
Of course, and I think that's human nature. We all sort of think we're going to be the outlier. We're going to be the successful one in this sea of people that are not
Yeah.
successful. When I was a broker, we were allowed to trade for our own account at the firm, but there was a holding period. We had to hold trades for 7 days, which I at the time I thought that was a huge impediment, and it really frustrated me.
Okay.
And it was one of the reasons why I eventually left. There were other reasons as well, but that was one of the reasons why I eventually left the firm that I was at as a broker, to pursue my own trading and give it a bash on my own. But interestingly, I've kind of gone full circle, and now I look back and I think, well, actually, a lot of the time that 7 day holding rule that I was bound to, often it allowed me to run winning trades for longer than I probably would have otherwise. Unfortunately, it did also catch me offsides a few times where you couldn't execute a stop loss because you stuck in the trade for 7 days, and that could really hurt. And that was, as I say, one of the reasons why I left. But why I say I've gone full circle is that the style of trading that I've kind of come to adopt nowadays is actually far more of a medium term style, where I'm mostly holding for a couple of weeks, even longer than that sometimes. So in a 7 day holding period actually wouldn't be a prohibitive thing now anyway, except when it comes to stop losses. I like to be able to get out quickly if I'm wrong. But most of my trades are held for several days to even several weeks or longer sometimes.
Wow. Yeah, because I saw you did a really great workshop, like a 5 series workshop. I can't remember the channel, but it was like a really great introduction. And in there, you went through a lot of your setups. I don't know if that you personally used them or they were setups for the purposes of the show. But I was of the opinion I thought that you traded entry off of 1 hour. Is that right? Do you still do that, or have you changed your?
Yeah, so I do look at intraday charts when it comes to finessing the entry on a position, because I want to. I suppose if we go back a step, my process is starting further out and then zooming in. So
Okay.
typically, I start with looking actually at weekly charts, and I've got a process that I do every weekend where I go over a bunch of weekly charts, and then zoom into the daily charts, and essentially by doing that, I'm trying to funnel out the stocks that I want to be focused on mostly, and the ones that are most actionable for the week ahead. And those are the ones that I'll put on my short-term watch list, and those are the ones that I'll then have my eye on very closely to try and initiate trades on. And once those stocks are onto that watch list, then I will drill down into the intraday charts more to try and finesse an entry, really. If, for example, I'm looking to try and buy a stock off a support level, or I'm looking to try and buy a breakout or whatever, I just want to see that the intraday trading action is confirming what I wanted to do. So that for example, I'm on the right side of the short-term moving averages. I can see that there's higher highs and higher lows being made on a short-term time frame, etc. It helps me to finesse an entry, and but then my holding time, as I say, is often for several days or even several weeks. And in that case, then the intraday charts are less significant in my life, but the intraday charts certainly do help me to try and get a good entry.
Mm. Yeah, well, I don't mean to jump subject because I have a whole load of questions on your process. But at the same time, when you said hourly entry, I was thinking hourly entry and holding for days to weeks. I was thinking the risk reward must be amazing, if you can hold and get in on a tight entry, right? But yeah, I digress. But I wanted to ask because I think it was after you left the brokerage business, you also had your own TV show in South Africa. Is
Yeah.
that right?
Mm.
What
I
was that
did for
like?
10 years. Yeah, it was fun. It had a lot of benefits. So, I decided that I wanted to do my own thing. I always felt I wasn't really a corporate animal for the long term. I did my time in a corporate, in the broking business. But basically, when I was 30, I figured it was a good time to take the leap and to do my own thing. Because at that stage, I wasn't married, didn't have kids. I'd made reasonably good money. I figured I'd acquired the necessary skills to do this on my own. And if there was any time, if there was ever a time to take the leap and to take the risk, that was it, because I was still young enough to go back and get a job if I figured out if I screwed it up. And part of what I did when I left the corporate world was I set up my business Traders Corner, which I still run today. But I approached the major business TV network in South Africa, a channel called Business Day TV, and I had done quite a lot of work with them as a market commentator, on various shows that they had. But I felt at the time that there was nobody talking to shorter term traders. There was, all the guests that would come on the channel were mostly long term investors, and they would look at fundamentals and look at PE ratios and dividend yields and all of this stuff, which is great, but it's more relevant if you're a longer term investor. And I felt there was nobody really talking to short term traders, and there was a gap in the channel for that. So I proposed an idea to basically put together a TV show for them. And I wanted it to be warts and all. So I said, I'm going to trade. I'll put up the money and I'll trade with my own cash. And it's going to be real, and I'm going to have to come back every week and own up if I made a mistake or if I got stopped out of a trade or whatever. Talk about it, be honest about it. And I wanted it to really be a real life portrayal of what trading was like, because I think there are far too many people out there who make it out as if trading is easy and you make money all the time, and it's this, like an ATM that you just go to and get money out of it all the time. It's really not. And I felt there was a need for something that was really honest, and that's was the inspiration for the TV show. So in a lot of ways, it was kind of a win-win-win all around, because it was my shop window for my trading advisory service, which I started after I'd left the corporate world. It was good content for the TV channel. And then also what I did for the with the winnings every year was I donated them to charity. So the charity got to benefit. And it was educational for the audience, so all around it was just win for everybody.
Yeah.
And it was great fun. As I say, I did it for 10 years and I was profitable for 10 years. Some years were better than others. But, with the usual ups and downs, there were drawdowns, there were difficult times, but then there were some great times as well. I had a couple of excellent years where I managed to donate quite a lot of money to charities, which was very, very rewarding to do. But also, what I liked about doing it on TV and being in front of an audience is that it keeps you honest. And to that extent, we all should have rules as traders. We have a playbook, something to guide us. But it's very easy if you're just sitting in your office at home trading to ignore the rules or to break the rules and to start doing silly things. And having been a broker in the retail trading community, I'd seen all the mistakes that people make, all the silly things they do. And really, if you distill it down, there's only a handful of things that you can do to really screw it up. But yet most of the retail trading community managed to do that time and time again. And I thought, if I can go on TV and show them how it's done, but be honest about it, and also be honest about owning my losses, and make it out to be real, it'll be helpful for people. So the sort of mantra that I went by with that TV show was promoting proper trading principles. And to the point that I was making before, is it kept me honest, which was such a good thing, because I couldn't go and break those rules, because I'd look like a fool in front of an audience of hundreds of thousands of people. So therefore, it's much easier to go back on TV next week and say, well, you know what, I had a stop loss in mind, and there was this, it got triggered, I'm out, I closed the trade. Even if the stock then bounced back and I would have been fine on a position like that, I could then still go in and say, well, you know what, I had my rules and I stuck to my rules and I did what I was supposed to do. And that's trading, right? It's just the nature of the game. So being on TV and being in front of an audience was nice. I really enjoyed it, and the only reason I stopped doing it actually was because I emigrated to the UK 5 years ago, and at that stage we didn't really. We did have the technology to do broadcasts from overseas, but that it was kind of not really appreciated at that stage, because we hadn't lived through the pandemic where we all had to suddenly learn how to use Zoom or Teams, you know.
Yeah.
So in essence, the TV show got cancelled because I left the country, which was a pity, but it is what it is. And it was good though. 10 years of trading online in front of a live TV audience was
Yeah.
a lot of fun.
Yeah, it's a great point. I didn't consider the fact people were, I guess, yeah, almost like your own kind of coach watching you, and every uh, divergence from your process you take, it's kind of keeping you on track. But I take it you
Yeah.
already had your own process developed, or multiple setups before that show, and that's kind of what you
Yes.
focused on. Or
Yeah, definitely. So I'm very much a technical analysis driven trader. So I look at trends, I look at moving averages, I look at chart patterns that have a relatively strong repeatable nature to them. So yeah, I absolutely had a process. I've refined it over the years. I've finessed it over the years. But I suppose if I really had to break it down, what I'm doing nowadays is not really all that different to what I was doing on TV 15 years ago when I started out. The principles remain largely the same in terms of, being responsible about risk assumptions and exposure and all of those sort of things. None of that's really changed. I think I've probably become a little bit more technically proficient over the years since then, and years and years in the market will do that to you. I think you start to eventually develop a bit of an intuition for charts, and the charts kind of speak to you after you've done this long enough that they almost you almost gain an intuition of what's likely to come next when on a chart pattern. Not always, I mean, I don't want to make it sound like it's easy and that I can predict the future, because I absolutely can't. But there are times where you can look at a chart pattern and you can just see this is about to break out, or it's about to break down. And I think that just comes with time. You develop that sort of sixth sense in a way from looking at charts and looking at price action for many, many, many years.
yeah, yeah, and one thing, I guess, that intuition you brought up, I guess it's probably easy for you to talk about intuition when you started looking at charts or trading when you were, I think it was 13 or 14, right? I mean, but the
Yeah,
volume of time, and when I heard you speak with Stephen Goldstein, um, I think I'm paraphrasing, but you were the kind of the master of the unsexy parts of trading, but also the most important parts of trading, like the discipline, the
yeah,
routine, the pre and post game plan, which I will definitely get into. I don't want to get into it now because
yeah.
I'm jumping. But when you finished the TV show, were you trading your own account through that as well, or after
Yeah.
that show did you go full? At what point basically did you go full trading for myself?
Yeah, so I went full trading for myself from the soon as I left the corporate world. So
Okay.
in 2009, basically it was after the financial crisis, and that was when I decided to leave the broking business, because a lot of our clients had just been wiped out, quite frankly. And I thought, well, this is going to be a rebuilding process. If I stay in the broking business, we're going to have to rebuild this business and find new clients. I can either do that for the broking business, or I can leave and build something else for myself. Doing something that I was quite passionate about, which was obviously trading my own capital, but also guiding other retail traders in terms of how to trade properly and how to apply the right principles to their trading. So, but yeah, so from that moment on, from 2009, as soon as I left the corporate world, they left the broking business, I started then trading my own capital. But I also started my Traders Corner advisory business and started the TV show all at the same time. So all of that started in 2009. And so essentially been trading my own capital since then. But also, I mean, I must stress that I don't eat what I kill, in the sense that I'm not a trader who relies on my trading profits to live off. I have other things to do that. My advisory business pays me an income which pays the bills. I do some analysis work for one of the banks down in South Africa still, and they pay me a monthly retainer. I also have my own podcast, which is fortunately sponsored, so get a bit of money from that. So all of these other things that I do provide me with a risk-free income. So I don't rely on my trading income to live off. And I guess you can ask me why that is. I don't know if you've got that lined up as a question, or if you want me to talk about that now.
Yeah, I mean, I kind of have a feeling I know from hearing people talk about trying to. I think you've done it the right way, and I suspect that it's really supported your trading, not having
Yeah,
to eat what you kill.
yeah,
But yeah, I mean, even having a little bit of support, I guess as an entrepreneur, it's not a monthly paycheck. Maybe some months were different than others. So how did you
yeah.
find, just I guess, being an entrepreneur and also being a trader when maybe the income wasn't as stable as when you had your own job?
Yeah, it was very interesting. So fortunately, all of these other risk-free income sources that I've started up once I left the broking business all kind of started generating income quite quickly.
Oh,
And
nice.
so I was never without sort of a monthly paycheck, as it were. And at that stage also, as I said, I was young, I was not married, I didn't have any kids. My living costs were quite low. So it was an easier, I didn't have a very high monthly burn rate at that stage. Nowadays, I've got a wife and two kids and a house, and so my monthly burn rate is much higher now than what it was back then, which is a whole nother story. But to your question, how did I find it moving from having a nice, safe monthly salary coming in from a bank, effectively, or which was a bank that I worked for, to suddenly being master of my own destiny, but there's no salary coming in at the end of every month. It's I start every month on zero, and I've got to make sure that I earn something. It was I think I did it in the right way, in the sense that I had made enough money that I was quite financially sound by the time I did that. But I'll say that I certainly did underestimate a lot of the challenges of trading for yourself when there's not that nice big monthly paycheck coming in and that nice big quarterly bonus that we used to get as brokers. It's a different mindset, and I think I used to trade when I was in the broking organization and I was allowed to trade my own account. I think I traded a lot more freely and probably a lot more aggressively, which was and wasn't a good thing at the time. When you're suddenly faced with the reality that there's not that big quarterly bonus coming, there's not that nice salary coming every month. It's now on your shoulders. You've got to make this work, and if you lose a lot of money, it's going to really hurt.
Mm.
I don't think I was fully ready for that psychologically when I made the transition. To be honest, it
Yeah.
took a while to come around to the realities of it,
Mm.
and and it's definitely did affect the way that I traded. There's no doubt about it. I was suddenly a lot more cautious, a lot more conscious of risk, because there was no safety net.
Yeah. it's crazy how I guess the psychological factors can really slow the hand or speed up the hand when you're putting in orders. But were there any moments you remember that were particularly hard, or you realized, oh shit, I mean, this is no joke now. I mean, if I lose 5-6%, maybe I won't have enough to cover the bills. Was there any moment like that you remember?
Well, I never worried about not being able to pay the bills because I'd never cut it that fine. I
Okay.
felt I had enough of a capital base to keep me going. And like I said, I've had these other risk-free income sources that were paying me along the way in any case.
Mm,
However, having said that, there were times where I had a couple of bad months. In fact, literally 2 months after I started, uh, I took a big knock, and suddenly, it really felt, that like a big kick in the nuts because I was like, I've just left this good, well-paying job to do this trading for myself, and all of a sudden, I've just found myself deep in the hole.
mm,
And that was that. But it was also quite a necessary reality check that, yeah, got to be more conscious of the risk, got to be careful, got to know how much you're willing to lose, and accept that and walk away when it's not working. You can't dig yourself into a deep hole
yeah.
because it really counts now. There's no safety net.
Yeah. Was it an avoidable mistake, or was it something just you had too much risk on maybe?
Yeah, it was avoidable, and I had too much risk on. Yeah,
Okay. I
basically,
was
it's an options trade where I do a fair amount of options, which I enjoy, but I at that time I was kind of trading put spreads, which with quite a lot of left hand side tail risk, and the
mm,
market fell very hard I think it was it 2010 or 2011. It was one of those years. There was a big sell off in August of that year, and I kind of caught myself on the wrong side of a left hand side move, and a whole bunch of written puts started to go in the money, and it
okay.
hurt. Yeah,
Yeah. Yeah, sounds like it. Yeah.
yeah, yeah,
um,
yeah.
but from your previous interviews, it kind of sounds like you've got a really great trading mindset, like a really strong, um, I want to say mentality might be the wrong word, but can you talk through or explain to people kind of some of the routines you have every day to approach when you come to approach the markets?
Yeah, absolutely. So, yeah, I have a weekend routine as well as a daily routine. So, on the weekend, I've got a bunch of chart lists that I sift through, mainly looking at weekly charts. And I try and build a picture for myself of where the markets are at using that weekly chart list. And I also then, from that, distill out setups that look interesting for the week ahead, and effectively create a little bit of a game plan for myself or a watch list for myself to go into the new week with. Having done that, then I've sort of zoomed in and I've got a slightly more focused watch list for the week. And then I will assess that watch list throughout the week. In terms of a daily routine, I start the day very early, mainly because I do still have my advisory business, which is down in South Africa, where I essentially have subscribers who pay for my research and my market insights. And being in the UK, I'm now 2 hours behind South Africa. So, but I'm still kind of working on a South African clock. So it means I've got to
Mm,
get up really stupidly early every morning to get started. So I actually wake up at 4:30 in the morning to start my day. And
mm,
immediately I get into my office and I start having a look at what's happened to the markets overnight in the US and in Asia, look at levels, look at the news, see if anything has particularly interesting has broken, and then I start to go through that watch list that I've kind of done on the weekend, and start to sift through the charts and have a look for opportunities, see which ones potentially are actionable today. And then as part of my work is I actually write up what's called a daily desk journal. And that's effectively the product that my clients pay for, where
mm,
I publish it every morning for them. And we're looking at, I look at a couple of things every day, but as a bog standard, I look at the South African top 40 index because that's where a lot of my clients trade. But I also look at the S&P 500. And then in addition to that, I'll then bring in anything that's been on my watch list from the weekend research that I've done. And if there are any particularly actionable charts for that day, then I'll start to, identify the levels where we need to be looking to initiate a trade, whether it's long or short, where a stop loss would be, where a potential target would be, and effectively just create the daily game plan, as it were, so that you've got a plan, you've got something actionable to do once the market opens. And importantly, all of this work gets done outside of market hours. So what effectively it means is that I'm not distracted when I'm doing it. I've got, I suppose, the clearest mind frame to be doing that work, so that by the time the market opens, I've actually got a bunch of levels that I'm watching, and I know what I need to do. If X happens, do Y. There's a plan that's formulated beforehand, and it's all formulated outside of market hours for the most part. I'm not really a day trader. I do very little intraday trading. I do like to keep a bit of distance between myself and the screens throughout the day, so I'm not constantly sitting in front of the screens. But in the time that I am in front of the screens, I watch the market. But then I'll obviously be watching the levels that I've identified in my research outside of market hours, and looking to then enact trades if certain criteria are met based on that research that I've done previously.
Yeah, it sounds so methodical, which is great, and the way it should be. But I will say, on your point about watching screens or day trading, I think it was Brent Donnelly said something like, "I'm convinced you lose 100 IQ points as soon as you've got money on the line and you're watching a chart." Because that
Yeah,
the idea when you're watching, identifying levels pre-market, or well, before pre-market opens, before the market opens in general, at
yeah,
least you have something to focus on, But as soon as the market
yeah,
opens, everything becomes, especially when you've risk on it, everything becomes relevant. Every tick in the wrong direction is
yeah.
especially if things are going against you. I find, even today, I was short. I was kind of, I trade event driven sometimes, and so
Right.
with CPI today, and there's
Mm.
so much push on yields at the moment. I was short dollar via FX and yields into CPI, which worked well for about 20 minutes, and
Right.
then obviously just starts ticking against you. But when you have that risk on and things start going the wrong way, all you're focusing is on, things that are going your way. You just kind of
Yeah.
almost blind to, this is reversing and you're on the wrong side. You
Yeah.
know what I mean?
Yeah. Yeah. Yeah, that's right. I think you can be too close to the screens and too close to the market sometimes, and it can cause you to lose perspective. So for that reason, I like to try and have a healthy distance away from the market, but it still be close enough to monitor what's going on, and to try and strike that balance, Um, and like I said, most of what I've done, or most of what I trade, is usually sort of quite well thought out beforehand. I don't often act on a whim on an intraday basis. And I think it was Peter Brandt who had a great quote. He said, I think it was him. He said, "I'm a net loser on trades that I hadn't thought out 24 hours before."
Mm.
So, in other words, what he means by that is that any trades that he did on a sort of like impulse decision, maybe an intraday decision or a gut feel, whatever, but that wasn't carefully planned out and really thought properly through beforehand. Net, he reckoned he's a loser on those kind of trades throughout his career, and that's really stuck with me, because I think it resonates with me, because I feel the same way. I feel that a lot of trades that where I just go in on a whim, trades that are put on without careful thought, those are the ones that often end up not working. Um, Whereas the stuff where I put trades on where they're carefully thought out, there's a proper strategy, it's been methodically run through the process. More often than not, I've had success there,
Yeah.
as opposed to the stuff that's done sort of impulsively.
Mm. Yeah. No, it's so important, I think. And I quite like that from Peter Brandt. It's definitely something I've been guilty of in my career. Maybe less career, as in when I've started trading.
Mm,
Maybe less so on the kind of impulsive intraday stuff now, but I think there were definitely times where I let myself get the better of myself and do things that weren't pre-planned. Now, my event-driven stuff is pre-planned, but at the same time, or there's a process behind it. But again, as I said today, I definitely fell into that trap. I'm kind of glad I did, because it was moving against me, but at the same time, it wasn't all. I guess the post-event plan wasn't well thought out enough, was probably my feedback to
Right.
myself,
Okay.
right, while on a
Okay.
podcast with you, whatever. But yeah, when you talk about that desk journal, so that is different to your actual journaling process. And when you mentioned the S&P 500 and the South African, I can't
Yeah.
remember,
The top 40 index.
top 40, yeah.
Yeah. Yeah.
Is that the index that you're doing technical analysis for, and then you provide the individual stocks?
Yes, yeah. So as a standard part of my daily routine is to do analysis on the index, so both the top 40 index and then also the S&P 500. A lot of my clients trade those. I also trade those instruments. So I find it's very useful to do analysis on those on a everyday basis.
Yeah.
And then beside that, I'll look at stock ideas that are popping up on my radar that are actionable. So, and I'll only talk to the stuff that's actionable at that point in time. So obviously I've got a whole process going on in the background, looking and scanning for ideas and looking for opportunities. But really what I bring to the table for my clients that pay for my research is the stuff that I've already done the work on. And it's just ready to be actioned. And I kind of view what I do as it's a bit of a crutch for them, I suppose. Some of the clients that I cater to, they're all retail clients predominantly. They don't necessarily have the amount of time that I do to do the research that I do. So in essence, they're paying me to do the research and bring them the opportunities when I see them, and to then illustrate how you go about trading these opportunities, where you need to manage your risk, et cetera, et cetera. But I always say to the clients, you can't just take what I say blindly and just follow it blindly. I think it needs to be viewed as an assistance to what you're doing anyway. But at the end of the day, for the clients that follow my work, the profit or loss is going to rest on their shoulders, not on mine. Mm-hmm. So I can bring the research to the table, I can bring the strategies, et cetera, but they're the one that's going to have to push the buttons at the end of the day. And they're the ones that's going to have to manage the risk and manage the stop losses and manage the taking of profits, et cetera. So I'm there to help, but there's only so much that I can do. A lot of the responsibility ultimately rests on their shoulders, and they know that.
Yeah. Yeah, it's a great point. I mean, it's great to get the research, but it does need to be a component of your own process or their own process, or hopefully they do have a process. I'm sure if they're your clients, you've told them and they're building their own process. But I think it was one point I found so important. I subscribe to some guys online like Jason Shapiro. I watch some of his I subscribe to what he's seeing positionally in futures markets, or Brent Donnelly. I'll read his AMFX. But that is all just kind of additional maybe confluences to things, cases that I'm building, as said, similar to you on the weekend, or if it's event driven, or if it's not event driven, if it's macro, some setup that I'm watching, it would be an input into that. Whereas when I started, I just wanted the idea, and I just kind of press a button, and what could possibly go wrong? Everything goes wrong, and then you don't know what to do. Right? So,
but that's right.
I
watched your last interview with Jason Shapiro, by the way. I thought it was excellent. It was really good.
Thank you. Yeah, that's high praise coming from. Yeah. Thank you very much.
It was raw, and that's what I really liked about it.
Yeah, I had someone comment saying it was borderline depressing, and that they had to go and watch some guy on CNBC or something afterwards to bring their positivity back after watching it. I was saying, look, thanks for that. And when I heard your interview with Stephen, to just go back to the process, I guess the processes you have around trading, you talked about journaling quite a bit. So do you journal post every trade?
Yeah, I do. I've got a journal that I keep where I write down every trade that I've done, why I've done the trade, what the conditions were at the time. And then I do a little post-mortem afterwards as well. Why I exited when I did, what the result was as well. Was it a profit? Was it a loss? And why did I exit then? Was it a stop loss, or was it a target that was reached, or was there some other reason why I exited a trade? What I find quite interesting about doing that and quite useful is that every 2 months or so, I'll then go back and look at my journal and then revisit those trades that I've written about, and actually then see, was I right? Should I have held on longer, or was I right to exit when I did? Because that is constant feedback then. And by doing that, I learn what my strong points are, but I also learn what my weak points are. And I learn what I need to focus on to be better. But I also learn where I'm strong. And, I kind of think, well, if those are your strong points, lean into that. Focus on where your strengths lie, and obviously work on your weaknesses.
Yeah, it's interesting. When I was reading the Market Wizards book recently, different personalities gravitated towards different types of analysis, and some people would think some analysis doesn't work. Some people think fundamentals doesn't work or techniques doesn't work, and it's just about, again, as you said, what the strengths are for you. But did you find in kind of reviewing all of your past trades or periodically reviewing them, you had specific strengths and gravitated towards specific maybe technicals or behaviors?
Yeah, most definitely. So what is very well known, but I mean, I'll raise the point anyway, is that you need to find a style of trading that fits your personality. And so you're quite right. There are so many different ways to trade. There are, guys that are short-term traders, intraday traders, quant traders, technical traders, fundamental traders. There's so many different ways to trade, to express what you do. And it's not that any of them are right or wrong. It's which ones are right for you as a person, what fits your personality. And definitely through the journaling process, I've found I've kind of come to appreciate what types of trades fit my personality. And it's also why I think I've kind of arrived at the type of trading that I do now, which is somewhat more medium term in nature, but it also allows it fits my life now. I've got kids, I've got family, I've got a house, I've got things to do outside of markets, and all of that needs to be catered for. So I found a style of trading that works with my life and works with my personality, and I came to realize, I'm not a day trader, I'm not a scalper. I actually make more money by holding slightly smaller positions for longer. And because the positions are smaller, I'm able to hold them longer. Whereas big positions, you get scared out of them quite quickly if things go wrong, or if they go right, and you suddenly sitting with a nice profit, you end up maybe taking your profits too soon. And I've actually found over time that I've ended up making more money by trading smaller positions, because I'm able to run those positions. I'm able to run the winners for longer. Psychologically, it's easier for me to deal with that and for me to manage that. So, but these are all things that I've kind of come to learn through the journaling process, and from going back and reviewing my past trades and seeing what works and what doesn't.
Yeah. God, I'd say, I mean, think about the value in realizing that about yourself. It's like, I wonder how much money you haven't lost because you made that realization from reading back through your charts. If you think about it, how much size you could have put on and you would have backed out of versus what you're comfortable with and what works for you. And obviously still working every day or every week for you.
It works, but listen, this is a constant learning game. By no means do I think I've mastered the market, and and I think we've all got to be very careful of ever getting to that point. It's a constant work in progress. It's a constant grind, and we all go through ups and downs. No matter how experienced we are, we all go through ups and downs. There's, you have some great months. Right now, I'm having a great month, but there've been some tough months along the way this year also. And it's just, I suppose, just repeat the process, keep doing it, keep doing the same things, and manage your risk. I mean, that is just so important, and I'm sure we'll talk about that more. But managing risk and keeping losses small is vitally important. But keep on grinding it out. Don't get too hung up on bad times, but also don't get too overexcited about good times either. They come and go. Good times come and go. Bad times come and go. And the key thing is you want to stick around to be able to keep playing the game. That's the key.
Yeah. Yeah. And I love the way you mentioned, both bad times and good times, because naturally people associate negative emotion with bad times. When I interviewed Stephen, he said one of his most challenging moments was when he had a big winner one year, or say you've had a great month this year, or obviously you've had multiple great months, but this particular month was a great month for you. His equivalent was he had a great year, and then the next year he was so tied to that great year he couldn't let it go, that it ruined his following year. So I really like the way you've mentioned both sides of the coin there.
Yeah. So when I was earlier on in my career, when I was still a broker, but I was also trading my own account, it was amazing how often my best months would suddenly be followed by my worst months. And you look back and you say, well, why was that? And the reason I can honestly state was because I just got full of myself. You have a great month, you think you're the king of the world, and now all of a sudden, you want to start swinging the bat harder.
Yeah.
And that's when the market's going to come along and, give you a good meal of humble pie to eat.
Yeah.
And those were my experiences, So and you end up with these wild swings up and down in your P&L, and I don't want to experience that really. I'm quite happy to have I don't like having the big losses. Let's put it that way. Small losses are fine. That's part of the game, but don't want to have big losses. It's just over it.
Yeah.
Had enough of those in my life.
Yeah. If I'm being really honest, I actually think that's one of my probably the weaknesses I'm trying to work on at the moment. If I look back on my trades, even coming into this week, I had 2 weeks of holidays where I went to Australia, about kind of 2.5 for my friend's wedding, and I came back, kind of easing back into it. I do a newsletter as well and putting together my ideas, and I was short oil. I came back and did some kind of analysis to put together my views on different asset types, and one was oil. And obviously we have the famous, the Trump trade, and that's supposed to be happening, or that's in full force really. And for whatever way, I have to have a technical setup too, but it was a technical setup in oil. I took short oil last week and I closed at 3% trade, and I had put over 1% in that, so it was a good trade. Coming into the week thinking I don't know who, and then even into today, when my idea was, short yields and short USD fade this big run into CPI because everyone's long inflation and growth. And as I said, it worked okay. But if I'm fully honest, at the peak of risk, I think there was over 5% risk I had on the same idea in one day, and I'm like, and I feel like I carried so much of that oil trade confidence into my next trade. And I was lucky to come out at a 1% loss today. Could have been a lot worse, so it's
right.
When you realized you were doing that, was it just over time you got tired of it, or was there anything in particular you said, okay, is there any kind of, I'm not looking for a quick fix. I know the answer to what I should be doing, but I guess when you went through that, how did you move through it?
Well, I write a lot of letters to myself. I've got a whole file in the drawer next to me here and usually those letters were written in tough times, when I had suffered a bad drawdown or had done something wrong. I'd really feel it deep down, and I've actually found that the best way to kind of get over it was almost to write it down and write down what the lesson was and how to avoid doing that same stupid mistake in future. And that was almost like that it was almost like transferring that pain out of my heart onto the page. But it kind of gave me some closure. It was quite a cathartic exercise to do that early on in my career. And I've often looked at it and I thought, there's probably a book to be published actually if I was to dig out all of these letters and write them, publish them, because there's lessons in all of it. But yeah, I mean, enough of those, I think eventually, taught me what not to do. And I think that's so key in trading. If you know what not to do, what mistakes not to make, well, then you're making progress. And that was invariably how I dealt with those, really horrible drawdowns and silly trades when I was younger. And I think, I talked about your personality. You've got to also understand your personality and what have you. But I also know my personality is that I actually do have quite a high tolerance for risk in life in general. I like to sometimes drive fast, like to do dangerous things, skydiving, bungee jumping, like all of that kind of stuff. So there's a part of my personality that has this, desire to take risk. But in the markets that I found I need to rein that in. And yes, take risk, but take calculated risk. Don't do stupid things. And earlier on in my career, I was far more prone to do stupid things and to take big risks, thinking that I was going to, make $1 million off a trade, instead of trying to go the, steadily build and compound your returns over time. And I guess that, I learned over time. Enough pain and suffering teaches you that after a while, that there's a sustainable way to do this. It's like that saying, that they refer to pilots. There's there's old pilots and bold pilots, but there's no old bold pilots. And I think the same principle can be applied to traders. I think, I think there's old traders and there's bold traders, but I don't think there's too many old bold traders around. If you're too bold in this game, you're likely to crash out at some point. So those who have stuck around and have made a long-term success of it, are very much on top of the risks. They understand how to manage risk, how to make sure that, they don't get carried out on a stretcher. It's important to keep, and we think about guys, like Druckenmiller and Paul Tudor Jones, or whatever, these guys, trade big money and have made an enormous success of their careers. But in my experience, having interviewed some of these guys, I haven't interviewed those two people that I mentioned, but I've interviewed some fairly high-profile traders on my own podcast. And what you realize is that even though they're playing with big money, the percentages that they're risking are not big, and for them, a good year in the market is like 30-40%, for example. That's a really good year. They're not aiming to try and make hundreds of percent, as many amateur retail traders might think they would be doing. It's not normally the case. So these guys are, they are an example of the old traders that are not so bold, actually. Bold enough, but not taking stupid risks. Let's put it that way.
Yeah. I'm still laughing that that's such a good phrase. That bit about the pilots, very good. But I love to go back a little bit, your idea about writing letters. I will do that, and I'll send you a photo of. I'm not going to show you a photo of what's written down, because you'd probably be like, amateur hour over here. But I'll send you a photo that I have written the letter.
Yeah, do it. It's a good cathartic exercise. It's like kind of giving you closure as well on what's happened. Being forced to write it down, it's very cathartic, and then file it away. It's always quite fun to look back on these things I've got letters going back 15 years here that I've
Wow.
written to myself, and it's quite fun every now and again to go back and read them and think, gee, okay, now I've come a long way from those mistakes.
Yeah. Yeah. And the other point you made about your personality, I mean, I could almost tell what you were going to say, because, I mean, I didn't know. Yeah, you obviously have quite maybe risky or fast-paced hobbies, but also the fact you're an entrepreneur in itself, it gives a certain kind of risk profile. And I remember when I spoke to Simon Ree, he said, it's okay to have the feelings or the impulses on what you're going to do. Just don't let them trickle down your right hand to your mouse finger and start clicking orders, right? So yeah, I like your perspective on that, to stay in
Yeah.
control. But do you still have the separation of your computer where you do your analysis and where you put in your orders? Because I did hear you have some
Yeah.
kind of process to.
Yeah, so that's right. I've got two systems in my office. One is where I do all my analysis and emails and browsers and all of that kind of stuff. And my actual trading station is on a separate computer in my office. And it's not. It's right here. It's they're like 2 meters away from each other. But the point is that I did that on purpose because I wanted the actual like trading machine to be separated from where I'm doing all my other work. And part of it is exactly what I was saying earlier about trying not to do anything impulsive, and
Yeah.
so what it meant is that if I'm going to go and put on a trade, I've actually got to physically get up and walk over to the other computer and wake it up because it goes to sleep after a while, and put on the trade. And I just find that process, it means I've got to be pretty determined to get up and go over there, and hopefully in that short 2 meter walk, if there's any reason to doubt a trade,
Yeah.
I might come to my senses and say, actually, what, that's not a good idea. Let's rather not put this trade on. So I quite like the idea, and again, it suits the style of trading that I do. It's not for everybody. I know a lot of people who want to sit in front of the screen and watch every tick, and that's fine. But I'm not that person. I prefer to have a bit of distance between myself and the market, and I find that distance is healthy, and that's why I set it up that way, so
Yeah.
that I've actually got that little bit of distance. I think nowadays the market is so easily accessible to us all the time. If it's not a computer that's at your fingertips, it's your smartphone. You've got your trading platform on an app on your phone. It's with you all the time. And I think it can be very easy to get sucked in. The market has a magnetism to it because there's always movement happening. There's always price movement. And it's quite easy to get drawn into that and to almost want to overtrade. They've certainly made it very easy to overtrade by virtue of having the systems so easily accessible to us. But I think overtrading it's dangerous, and I don't want to overtrade. I want to make sure when I trade, I want to do good trades. I don't want to just trade for the sake of trading.
Yeah. It's those pesky brokers that are making everything so easy for us,
Well, it's pros and cons, right? I mean, it's
Yeah.
great that
Yeah.
we've got all the systems that we have now, and it's online and it's so easily accessible. It's fantastic, but it comes with its pros and cons.
Yeah. Yeah.
Yeah,
It's like
yeah.
Pandora's box. It just kind of, it should be amazing. But as you said, it's a bit like, if you get drawn into it, then it can end you quite quickly. So
Well, I think I don't know who it was that referred to it, but said basically like it's like a slot machine. It can become like a slot machine if you
yeah.
actually allow it to, where you've got this thing at your disposal all the time, and there's prices moving all the time, and you can buy and sell, and you can do whatever you like at all hours of the day, wherever you are.
Yeah.
But if you actually are doing that, it becomes more and more like gambling, actually.
Yeah. Yeah. To shift back a little bit to trading and your trading process, you mentioned a little bit about kind of a top-down process earlier in the call, but I know you're big on finding high probability setups. So I wonder if you could give kind of an insight into your your weekend analysis that you do. I know you carve out, I think it's 4 hours or so on the weekend to try and find high probability setups. You talk
Yeah.
us through that.
Yeah, so that's it. So look, first of all, I've got a watch list of stocks and indices that I watch. So and those have to be of a certain level of liquidity and tradability and what have you. So there's that.
Yeah.
But then when it comes to looking for ideas, if I'm looking for a stock that's a long, for example, certain things I like to see. I like it to be above the 200-day moving average. I like the 50-day moving average to be sloping upwards. And then these are just basic filters that help to put the odds of success in my favor. It's not to say that there's a guarantee of success, but if a stock is trading above its 50-day moving average and its 50-day moving average is pointing upwards, it invariably means that it's got some upward momentum on its side. So therefore, you want to be looking for buying opportunities in that type of setup. Just on a pure probabilities basis, you're more likely to be successful buying a stock that's in a rising trend than trying to bottom pick a stock that's weak, as an example. So I have filters for that I scan for on the weekend that basically bring me all of the stocks in the S&P 100 that are trading above their 50-day moving average, for example. It's one of the scans that I run. And likewise, look at all the ones that are below their 50-day moving average, because if you're wanting to short, then often that's where you might find higher probability opportunities in stocks that are inherently weak by virtue of the fact that they're trending lower and they're trading underneath their 50-day moving average, just for example. Yeah. So there's that type of process. There's also, I look for volume spikes as well. That's one of the filters that I run. But then a lot of it is actually just literally scanning through the charts. Once I've done that, and let's say I've now screened and I've dug out all the stocks that are trading above their 50-day moving average. What I particularly enjoy doing over the weekend is the process of actually just sifting through the charts and literally just clicking next, looking for those, just having a quick glance at every one of the charts in my watch list. And like I said earlier, I think it comes with time, but you develop a gut feel, you develop an intuition. And quite often the chart literally jumps off the page at me to say, here's an opportunity. And those are the ones that I'll then, jot down and say, okay, that stock looks like it needs, a closer look. It's part of the process that I love. And I thoroughly enjoy this. I honestly really, really enjoy just scanning through charts, looking for opportunities. Often I'll sit on a Sunday evening or Saturday evening if it needs to be a Saturday, with a whiskey and listen to some music on my headphones whilst scanning through the charts. It's one of my favorite things to do in the world. Oh. And that process it's enjoyable. And that's I suppose what Stephen referred to as the unsexy part of trading. Is it's all that research and all that stuff you're doing behind the scenes, which is not sexy. You've got to actually learn to love that unsexy stuff, because that's where your success is made, in loving that unsexy stuff. I guess it's like a sportsman, right? You see the sportsman on the field excelling, but why is he excelling on the sports field? He's excelling because he put in all the time in the gym and practicing, and all of that behind the scenes, the stuff you don't see. That's really where the success is built. And it's the same as a trader. You've got to do all this hard, unsexy stuff behind the scenes so that you can excel on the field, as it were.
Yeah, it's a great message just about the process, because, as I said, everyone loves playing in the Champions League final, but as I said, does everyone love training for 20 years, to get there? Yeah. But I would also echo on the creation of your watch list is based on screening or scanning, I guess.
Yeah.
So you put in filters, and so to create that watch list, you look at things like moving averages. Do you go beyond that, or will you just, to get your initial base of charts, you'll say, right, these are the ones that possibly are trending upwards or downwards, and then I'm
Yeah.
into my charts? Or is there anything
So
additional?
I have a screening process to try and, particularly when I'm looking at the US market, because there's so many stocks in the US
Yeah.
market to trade. It's impossible to look at all of them, I think. So I have filters that I apply to pull out certain stocks that meet certain criteria. Like I said, ones that are above their 50-day. Often I'll look for, say, stocks that are above 200, above 50-day, and also above their 15-day moving average. So that kind of narrows the universe down quite a bit. And I'll often filter that out and then use that. And literally then from that point onwards, then it becomes a case of I'll observe the charts and see if there's something that jumps out at me. And what I was saying about, clicking next, and then eventually, you find the odd chart that literally speaks to you. I think that comes with time. And I don't know whether you've read the book Blink by Malcolm Gladwell,
No.
but it's a great book all about intuition. And it's about how people who are experts in various different fields develop this sixth sense about whatever it is that they're an expert in. I've read stories about horse racing trainers who can take a horse and just look at its gait and immediately say that horse has got potential as a racehorse. Whereas to you or I who know nothing about it, right, it's just going to look like a horse running. Whereas with the right experienced eye, you have these people who have that intuition, and I think it just comes with time. And so the book Blink by Malcolm Gladwell talks about this, and I'm pretty certain it's relevant in trading and looking at charts as well. I've been looking at charts for 25 years. In that time, I think I've kind of come to recognize patterns that have potential, and that's the process. Really, it's scan through the charts, have a look, see which ones jump out at me, and then act on those ones. And of course, I'm not always right. I mean, nobody's always right. It's always a probabilities game that we're playing. I'm simply trying to put the probability in my favor so that I'm, able to win on 6 out of 10 trades. That's what I'm looking for. And then knowing that on the other 4 out of 10 that I'm not winning on, I've got to keep my losses small. And I know that that's going to happen. I know that I lose on 4 out of 10 trades. More, actually, about 45% of my trades are losers, and I know that. So you've got to go into every trade knowing that no matter how good it looks, it might be a loser. So for that reason, you've got to manage your risk. You've got to manage your position size. You've got to have a stop loss in place, because on those ones where your gut feel was wrong, you get stopped out. It's not the end of the world. Just move on to the next trade.
Yeah, 100%. I think that's probably I think when people start, it's expectations can cause issues, but also the ability to lose. It's definitely something that took me a while to do. I know other people, it's just a different mindset. I think I've heard you say, you learn to love your losers. That mindset it's not natural for people to do that. New people that start losing can feel like the end of the world, especially if you're not managing your risk. It could be half of your world. You know what I mean? So
totally, it goes against human nature to just be willing to accept a loss, and I think that's why trading is hard, because certainly for amateurs, they don't want to lose. They didn't come into trading to lose money, right? They came into trading to make money.
Yeah.
But they don't recognize that losing is part of the process. And Tom Hogard wrote an excellent book. You should also try to get him on your podcast. His book is called The Best Loser Wins. And the title of that book says all you need to know, right?
Yeah.
The best loser wins. It's so important to be a good loser, because at the end of the day, if you think about it, right, when you've got a trade, there are 5 possible outcomes. There's a big win, a small win, break even, a small loss, or a big loss. Those are the 5 possible outcomes that you can have with any trade. If you just eliminate the big loss, so that you don't have the big loss in your trading account, well, then you'll probably be profitable over time.
Yeah. And you pair that with risk management. It's like you should at least start breaking even. I found. I
Yes.
think.
Exactly. And that's the first step, right? That's the first
Yeah.
step in the right direction, is start breaking even. If you're a young amateur trader, you've not done this for very long, and you're, still trying to find your feet. If you go for a year and you break even, but you've learned a lot, well, that's a successful year early in your career, I think.
100%.
Winning will come with time, because through that learning, you start to learn what works and what doesn't work. But the absolutely crucial thing is, don't wipe yourself out. Live to fight another day. It's so important. But yet, the statistics show that a lot of people don't live to fight another day in the markets. They end up wiping their accounts out. And either then they don't trade again, or they, might come back at some stage once they've saved up more money to give it another go. Hopefully they learned the second time round. But a lot of people don't learn the second
Hopefully,
time
yeah.
round or the third time round,
Yeah. It's a great point. Now, before we go beyond your process, I wanted to ask. So once you've identified that chart that you think pops out at you, can you talk me through the process of kind of shifting down to lower timeframes that you do, and how that can help you finesse entries?
Yeah. So then what I do is I then have a look at the hourly charts. I don't really go below 1 hour charts. And I look at a 15 period exponential moving average on the hourly chart. So if I've identified a level where, there should be a support, or possibly there's a breakout or whatever, I just want to know that my hourly chart the price action is on the right side of that hourly 15 period exponential moving average, because that then tells me that the short-term momentum is also in line with what I'm wanting to see from a bigger picture perspective. And what that also means is sometimes I might not get the bottom or the best entry, but I'll get an entry where my probability of success is better than if I just randomly pick a level. And I found over time that's also a very useful filter when it comes to initiating trades. Certainly, that with the time frames that I look at and the types of trades that I do, is just be on the right side of the 15 EMA on an hourly chart. Puts you on the right side of the momentum.
Very good. I love the simplicity of that, because I feel like people get so caught up in catching the low, and they get stopped out 4 times trying to do it, and then by the time they're in, they make 3 more pips than you would have made if they just waited anyway for the crossover.
Yeah, exactly. And also what often happens with that is, once you've been stopped out 3 or 4 times, your psychology has been negatively affected as well.
Yeah.
So, and that's a crucial thing in trading. There's 2 types of capital that we've got to look after. One is obviously our financial capital, but the other is our mental capital. And it's very important to, make sure that whatever you're doing doesn't negatively affect your mental capital, i.e. your confidence. You've got to do the right things, act in a way that's going to, not going to kill your confidence, because it's so important in this game. You've got to feel confident. You've got to believe in what you're doing. And if you allow yourself to get into a place where your confidence gets battered, then, that's no good either for your trading success.
Yeah. And if you have the awareness to, like I say, it takes a lot of awareness to kind of feel that tilt when you come back to the screen, because I found that quite difficult too. It's, so we can talk very logically about, how we should be, whatever, aware of this. But when you're a trader, you come back, and sometimes the tilt is there. And even as, I've been trading for, say, three or 4 years now, that may be impacting me, and I don't realize until afterwards. So it's so right to bring that up, that, you need to be always trying to be centered when you come back to screen, and who is coming back to screen. Is it, you at 100%, or is it you at 80%?
Yeah. Yeah, absolutely. No, that's right. You've got to, and part of your process has got to be looking after your your headspace, look, your mental well-being, I guess.
Hmm.
And
Is
part
there
of the journaling, actually, just to go back to the point about journaling, one of the things I do each day in my early journal is I kind of write, how do I feel today? On a scale of 1 to 10, how happy am I? On days where we all have our down days. Maybe those are the days you shouldn't be doing anything then. But most days I'm sort of an 8 out of 10 or a 9 out of 10 happy, and that's cool. That's a great place to be.
Hmm.
But it's also interesting over time with journaling to actually measure that and look at the correlation between your sort of happiness index, if you want to call it that, and your trading results. And I found that there is a direct correlation over time of doing this. There's definitely a direct correlation. I don't know whether one causes the other. There's possibly that as well. I think bad markets and bad results maybe cause you to feel miserable, but at the same time, maybe feeling not 100% about yourself maybe also manifests itself in your trading sometimes, and creates poor trading outcomes. As I say, I don't know, there's a cause and effect thing here, but
Yeah.
it's interesting to note that, and it's something I've tracked for quite a while now, and it's interesting to note the correlation between your happiness index and your success in the market.
It's great to have that kind of data you've built up on yourself over the years. It's like a lifetime of counseling for free,
Yeah.
trading and writing these stuff. You know what I mean? So, but it's great to
Yeah.
have as a reference point.
Yeah. No, it is. It's excellent. It's really nice, and it's useful to have that kind of data, because it also then again teaches you more about yourself. And that is the thing. Trading will teach you a hell of a lot about yourself once you've
Yeah.
done it for a long time. It will teach you a huge amount about yourself, which you maybe didn't know beforehand.
Yeah, especially when you're under pressure. I found, when I started trading first, I almost didn't recognize myself when I was losing money. It's like, who is this erratic, emotional kind of guy that's, almost can't look at the screen, back and forth. And then I kind of had to realize, you need to build processes around these things, but also, you know, if you want to know yourself, well, put yourself under some pressure and see what happens, see where your
Yes.
weaknesses are, and then go back and see if you can support them or build around
Yeah.
them.
Yeah. Quite right. Quite right. Yeah.
I, as my last I want to say round of questioning sounds a bit formal. My last topic. So you're not only a very successful entrepreneur, a long-term successful trader, but you also host one of the most successful podcasts there are on trading. So how has podcasting impacted your trading over the years?
Yes, so thank you very much. That's a really nice accolade that you gave me there.
Okay.
You're quite right. So I host the Talking with Traders podcast, which interestingly it was something I started in 2020, and I was actually contracted by IG Markets to do it because I do work with them, and I have done work with them over the years for quite a long time. They wanted to do a trader podcast, and they asked me if I'd like to host it and run it. So I said, yeah, that's fine. And it was actually supposed to only be 6 episodes. That was it. 6 interviews with 6 traders. That's it. Anyway, we did the 6, and it was so well received. They said, okay, well, let's do 10. So we went to 10 interviews, and it was very well received. So they said, okay, well, let's maybe do another 10. And basically, what was supposed to just be a quick, short 6-episode podcast series has continued for now nearly 5 years, and we're now up to 100, and I think I recorded 111 episodes now,
Wow.
with some great traders, some excellent, a couple of high-profile traders, which has
Yeah.
been a real privilege to interview. But also, what I find interesting is some of the traders who I interview are not high-profile traders, and they have such interesting things to say. So, to your point about what's the podcasting done for my trading, it's taught me a lot, because it's a real privilege to be able to interview experienced traders, and to hear the perspectives of other people and the way they approach the market. So I've picked up lots of little tidbits of helpful advice and interesting information, which I guess I've applied to my process in various different ways, where it's been relevant to me. Yeah, so it's been fun, and I really do enjoy the podcast. I enjoy interviewing the guests. I find each week having to come up with to research a new guest and organize an interview with another guest can be quite taxing to do one every week, which we do. That process can be quite challenging to find the guests. But I really enjoy the interviews, and it's allowed me to network and meet so many interesting people within the trading community. So it's been a real privilege.
Yeah. Yeah, I completely echo that, on a much smaller scale, right? But do you ever find that your views or processes change after you speak to people, or are you at the stage where you're quite firm with your process and you're happy with how it works for you?
Yeah, I'm quite firm with my process, and I'm not really swayed by talking to other traders. And as much as I find it interesting to talk to traders who have a very different approach to mine, I'm not really swayed by what they do in terms of thinking I need to be more like them. I'm quite firm on my process. What I do find, though, is when I talk to traders who have a similar process to mine, but have maybe got certain helpful attributes, that's very helpful for me. And I,
Okay.
have been able to apply some of those lessons to my own trading, which is great. But I'm not particularly susceptible to changing my ways just from talking to other people with different methodologies. No.
What kind of attributes have you come across that have helped them, or traders, those successful traders, become successful?
Well, I think, the one common thread with all of the successful traders is that they all keep their losses small, and they're all very, very good risk managers. So no matter what style of trading they are, whether they're quant traders or technical traders or mean reversion traders or whatever, there are so many different types of styles of trading. The one thing they all have in common, though, is that they're all very good risk managers, and I think that speaks for itself. And it's what we were saying. You've got to keep your losses small in this business to keep in the game. You can't go around having huge, big drawdowns. It just doesn't work that way. You've got to be a risk manager first, actually, in this business.
Yeah, so true. The least, advertisable, if that's a word, kind of advice ever. You never hear it. It's not the thing you in the ad, but it's just everyone has that golden rule for risk management. And it's so true.
Yeah.
I said, when I started taking risk management seriously, it was when I went from losing money to not losing money, not making money, but just not losing money, And as you
But
said,
that's huge progress, right? That's
yeah,
huge progress, because suddenly by doing that, you're now not part of the 80% of the clients that lose money. You're
yeah,
now part of the other 20%. So you're already, in a minority of successful people just by making that transition, right?
yeah.
You're moving in the right direction. If you've gone from losing money to not losing money, well, that's great progress.
There's one, I think you probably had him on as well. Simon Ree is a great trader. On your topic of keeping losses small, he has kind of rules for when he'll, get out of a trade before it hits his stop. Is that something you ever do as well, or are you kind of a set and forget type trader?
No, I do sometimes preempt my stops and get out early. But you know what is it's interesting because not often, but I've had it at times where my actual original stop wouldn't have triggered, and I would have been fine on that trade. And those moments are extremely frustrating.
Yeah.
But Stephen Goldstein actually put me onto something. You talk about learning things from your podcast guests. So I interviewed him on my podcast, but in addition to that, I also actually did his high performance trader program as well.
Oh, right.
And he gave me a really, really useful tidbit of information, which has always stuck with me. And what he said is that in his career as a trader, often he would have trades that got stopped out, and then they would go the right way and start to then work and do what he originally expected them to do. And those often went on to become some of his best winners. And what he realized was that what you need to do in that situation is realize your thinking is right, your timing was just a little bit off. So if you get stopped out and then the price of the instrument you're trading starts to move in your direction again, put the trade back on. There's no shame in going back in for a second bite. And like I said, he found that actually those setups often were some of his most successful trades. So that was a little tidbit which stuck with me. And it was a point that he raised in a podcast interview that I did with him. Exactly that.
Yeah. Have you ever found that in your own trading?
Yes. Yeah. Lots of times where I've been stopped out only to then see it move back in the direction I expected.
Mm-hmm. And do you get back in now?
Well, I do now, yes. I didn't used to before. I used to sort of think, oh, well, I've been stopped out. That's that, move on, get on to something else. Don't fixate over the same trade that just hurt you. But the reality is, and this is something that Mark Douglas said in his book, Trading in the Zone. He said, you've got to remember every trade is unique. Each trade is unique of all other trades. So just because you lost on a particular stock the last time you traded it doesn't mean you're going to lose the next time you trade it. Every setup and every opportunity is unique. So, I've kind of taken that on board now and realized that there's no shame in getting back in. And even if you pay a higher price than what you were in at previously, before you were stopped out, doesn't matter. Go back in. If it's working, it's doing what it was supposed to do, go back in.
Yeah, it's great advice, and it's great, and it's simple, but it is hard. It's one of those things that's simple but not easy.
I think that's trading, though, right? That's all of trading. It's trading is simple but not easy.
Yeah, 100%. Gareth, can you let people know where they can find you online?
So they can find me online at traderscorner.london. That's my website. And then I'm on Twitter. I'm at Traders Corner. And then if they want to follow my podcast, that's the Talking with Traders podcast. You can look it up on YouTube. It's called Talking with Traders. It's also on all the major podcast platforms, Spotify and all of the other ones as well. It's there also. But we find we're getting good traction with it on YouTube. That's where a lot of people seem to be wanting to follow the podcast now. I'm on LinkedIn as well. Garth Mackenzie, spelt M-A-C-K. That's the Scottish way. I'm there. Yeah, those are all the ways you can get hold of me.
Awesome. I will link all of those. And I just want to reiterate that the service you provide online, I think it's, from what I can hear from you today, is really in depth. And when you talk about the realness you brought to that TV show, I think now more than ever, trading as an industry is crying out for realness, because it's gotten so bizarre. I don't know how many times I have to look at a guy with a face tattoo and sunglasses, talking about stuff. So I would echo that you were the real deal, providing things. When I hear you up at 4:30 in the morning, I kind of think of you as like the David Goggins of trading. At 4:30 when it's dark and you're just doing your chart. Yeah. So I'd highly recommend anyone to go and see and use Gareth's services. So thank you again. We've gone on for almost an hour and a half, and it's been a real privilege. So thanks for your time.
Thank you. It's been a pleasure, and all the best with your podcast. I enjoy what you're doing as well, Colin. Well done.